Let's continue with the invoice 1.2. Invoices. An invoice relates to the sales order or purchase order. When a business sells goods or services on credit to a customer, it sends out an invoice. The details of the invoice should match the details of the sale order. The invoice is a request for customer to pay what he owes. On the other hand, when a business buys goods or services on credit, it will receive an invoice from the supplier. The detail of the invoice should match the details of the purchase order. Here there are two issues that we need to consider. There is incoming invoice and outgoing invoice. An incoming invoice is an invoice that received from your suppliers or service providers. They demand from you is called incoming. An outgoing invoice is the one that you send out to your customers and you demand payment from them. An outgoing invoice should match with your sales order. An incoming invoice should match with your purchase order. Remember, incoming invoice is from your suppliers. Outgoing is from you. Outgoing matches sales order. Incoming matches purchase order. I hope that's clear. Let's continue. The invoice is primarily a demand for payment, and it is used for purchase. It's used for other purposes as well, as we shall see, since it has several uses. An invoice is often produced on multi-part stationaries or photocopier or carbon copied. The top copy will go to customers. The other copies will be used by various people within the business. So let us note that because it is used for comparison, the one that goes to the customers or the one that is sent to you, your supplier keeps, and others are used by the accountant for verification. What does an invoice show or contain? Most invoices are numbered so that the business can keep track of all the invoices it sends out. Information usually shown on the invoice includes the following: 1. Name and address of the seller and the purchaser. 2. Date of sale. 3. Description of what is being sold. 4. Quantity and unit price of what has been sold. 20 kilogram of shoes, $20 a pair. Detail of trade discount, if any, 10% reduction in cost if buying over 100 pairs of shoes. That is just example. Total amount of invoices including usually detailed any of the sales tax, sometime the date by which payment is due, and other terms of services. So these are key things that are included in invoice. So address is very important for both the sellers and the buyers. For location, the date of sale is very important. This is to mark the invoice that is overdue on the invoice which is due, to detect a description of what is being sold, that is list of items either which has been sold, quantity and unit price. This helps to calculate the total amount of money being demanded. Sometimes when more are being sold or ordered, you need to do the discount. The discount can be in terms of percentage, like 10% of the total amount of the invoice should also be known. Then finally, sometime the date at which payment is expected, we call it the due date, is also have to be included. So that is as far as the content of invoice. Let us go and look at the uses of multi-part invoice. The uses of multi-part invoices, I mean to say. As stated above, invoices may be used in different purposes. One, to copy to customers as a request for payment, as we know that it is like a demand note. It is a formal request of is a way of requesting for money. Second, copy to account department to match to eventual payment. Remember, account don't pay anyhow unless when they see the invoice and verify. Third, copy to warehouse to generate a dispatch of good as evident by a good dispatch notes. Yes, because like take for instance, you are ordering things from the warehouse, or you are selling, the invoice have to be the one to be used for releasing the good. Fourthly, copy staple to sell order and kept in the sale department as a second record of sales. This is very important for verification purposes for tomorrow. Business will design their own invoices, and there may be other copies for other departments. So that is noted. Business will need 4-part invoices. A small business may use the customer copy of the invoices and as a dispatch note, as well as invoices. The sale invoices may be stapled to the sale order, and both documents pass to the account department. So generally speaking, they're trying to emphasize that the invoices should be in more than 1 or 2 copies, because many of these sections need it. The people who dispatch the good need it. The account department need it. The customer need it. The wholesaler need it, because for verification purposes. Credit note. Let us look at credit note. Suppliers send out an invoice for 20 dinner plates, but the typist accidentally type it in a total of $162.10 instead of $62.10. The China shop has been overcharged by 100. What is China supplies to do. We said credit note is used for correction of overcharge. Debit note is used for correction of undercharge. All those are not the same. Now take for instance, you run your business and you overpaid your supplier. The supplier have to send a credit note to correct that. You run your business and some goods were returned by your customers. Debit note have to be generated to correct the undercharge. Alternatively, when China's shop receives the plate, it is found that they had all been broken in the post, and that it was going to send them back. Although China's shop has received an invoice for $62.10, it has no intention of paying it because the plates were useless. Although, what is China supplies to do? The answer is that China suppliers sends out a credit note. A credit note is sometimes printed in red to distinguish it from an invoice. Otherwise, it will be made out in much the same way as an invoice, but with less detail and credit note number instead of invoice number. Let's take note of that. The color of the credit note should be distinguished from the color of the ordinary invoice. So let's go and further look at it. Well, sorry. So let's go and define now. A credit note is a document relating to returns good or refund when the customer has been overcharged. It can be regarded as a negative invoice. That's very clear. Correction of overcharge in invoice is done using credit note. The following documents are sometimes used in connection with sales and purchases. Debit note, good receipt note. A debit note might be issued to adjust an invoice already issued. This is also commonly achieved by issuing a revised invoice after raising a credit or debit note purely for internal purposes, that is to keep the record straight. More commonly, a debit note is issued to a supplier, however we are hearing, as a means of formally requesting a credit note. Very clear. You need to issue a debit note that the supplier ensure that you give part of the money back to me because either goods got broken or either counting was not done well or goods were not all received. Then the supplier send a credit note to adjust the original invoice sent. Good receipt note. Record receipts of goods. Record receipts of goods most commonly in a warehouse. They may be used in addition to supplier's invoice note. Often the accounts department will want to see the relevant could receive note and a matching purchases order before paying a supplier's invoice, even where good receive note are not routinely used. The details of consignment from a supplier which arrives without an invoice note must always be recorded. So in good receive note, as we have seen, it is used for recording good receive, and this is match always. Good receive note must match the invoice. You have to cross-check the quantity that had been transacted. Then good receive note always, for account department, they use it for payment to check whether the calculation in the invoice is correct. The calculation in the invoice is correct. So that is that. We have to answer this question, a small one, just to test us. So now suppliers send out DAS to a credit customers in order to correct an error where customers has been overcharged on an DAS. As an signer supplier sends out credit note on originally sent invoice. That is the answer. So for now, this is the end of invoice. Invoice is very important. Good receive note is very important. Credit note is very important. Debit note is very important. For us to tackle other issues ahead, we need to understand those terminologies. We are still understanding terminologies. We are still not yet started tackling calculation. The moment we reach calculation areas, you guys will see the why you need to understand all those terminologies as they are. It will help you to understand reading or perfecting any question, comprehending any question, approaching any question that might come along. Otherwise, thank you so much for your time. As I said, the lessons will continue. The next topics, which is very beautiful and nice, is going to be now the need for books of prime entry, the need for the purposes for the book of the prime entries, where we are going to see sell day book, purchases day book, sell day book, purchases return day book, journal, cash book, and petty cash book into detail. Otherwise, I wish you all the best. Ensure that you subscribe if you have not done so, and ensure that you also share the information, because information is power. Guys, love you all. Enjoy your weekend. Wish you all the best.